Good morning, everybody. Welcome to the Silent Wealth Management video blog. Today is Thursday, May the 12th. And yes, it's been a volatile week, no doubt about it. You had a 200-point up day, 200-point down day. So it's going to be like this for a while, okay? There's just a lot going on economically in corporate earnings. And now this next or recent bombshell was about, retail sales are so horrible. And yes, for many establishments, they are horrible. Aeropostale filing for bankruptcy. Macy's just reported a horrible quarter. Now, but let's think about how Americans are buying their goods these days. Okay? Those stores may be hurting, but Amazon is not. And this is not an Amazon buy recommendation. I'm just saying, making a point here. Retail sales a little bit different in the bricks and mortar than it is online. I mean, when you look at it, how many people shop online these days? In fact, I think everybody does it on a weekly basis. You do something online. So, yes, is it a fact that possibly 1/3 of the malls are in trouble? Yes, that's possible. I mean, people go to the mall a lot less. They don't want to deal with the headache and the traffic and the parking and the walking, okay? Because as Americans, we'd rather sit on our chair, click something and buy it. I mean, I think we really rather would do that. So, it's not as bad as you think. And what I hear on CNBC, which I have it on all day long in my office, is just everybody trying to just shove fear into people's faces. And bottom line is, what makes the markets move are fear and greed. If you're fearful, you're going to sell at the lows. If you're greedy, you're going to hold on for more money and then you're going to get clobbered. Fear and greed is really what moves the market, and that's why I find it interesting. And let me just explain to you something pretty funny. I had somebody I talked to the other day, and they said, well, I'm learning how to trade. I've got this, E-Trade or one of those something trades, have a paper trading account. I said, well, that's great. Okay, so you can learn a little bit. Because, yeah, I'm doing great on my paper trading account. It's like playing online poker with nothing at risk. You can go ahead and go all in every time because there's nothing at risk. It doesn't matter. But when fear and greed comes into play, that is a big deal. So just because you can paper trade doesn't mean you're going to be able to trade for real, because let's see how you feel after a stock you bought gaps down on earnings to $14. Let's see how you feel when you've really lost 30% of your money, hard money. If it's on paper, it's like, all right, let me sell it, go to the next one. That's not the way it works, okay? That's why it takes experience, it takes knowledge, it takes somebody who knows how to dissect these companies and find what sectors are in play. And that's something that we try to do with our clients. Now, that being said, you had a report out today that jobless claims are up. Okay, jobless claims are up, the biggest number in over a year. We saw that. We saw that IBM's laying off. We saw a lot of big companies are starting to lay off a little bit. But keep in mind that unemployment rate is still below 5%, which for all intents and purposes, that's considered full employment. So the economy is chugging along at a very slow rate. First quarter GDP was 0.5%. We, as a U.S. economy, are used to 4% growth. That's really what keeps jobs going. That's really gets our economy chugging along. But over the last 7 years, we've been the plow horse economy at about 2% growth or less at times. So the recovery has not been as robust as we had hoped. Now, some countries make a living at that. France has been growing 2% for 40 years. Japan has been growing at a slow rate for years and years. Are we France? Are we Japan? Absolutely not. But what the country needs is some kind of, and we've talked about this in the past, you hear the candidates talk about, is you have to have a revision in the corporate tax code, because when you allow companies to park money outside of this country that are domestic companies, park them outside of this country, I think that's BS. And as much as I like Apple as a company, I like their products, I hate that they park $200 billion in the UK. I don't like it. And other companies doing those inversions where they're merging with a company that's smaller, but because they want to be home based out of Ireland, because Ireland has some of the lowest corporate tax rates in the world. So I think that that's going to all work out down the road. Now, short term, I think the market's in for a little bit of trouble. I don't see a crash. I don't see a recession. I don't see a bear market. What I see is some volatility, probably biased to the downside, maybe 5-10% downside, which in my opinion would create enormous buying opportunities. In fact, I did a little buying yesterday. Just people that didn't own it, I bought some more Apple at $92.93. Again, I don't know your situation. I don't know if it's suitable for you. All I know, at 8 times earnings, the stock is probably a pretty good value down here. Doesn't seem to want to go much lower than that level. Has long-term support. The stock has long-term support around that level. So the people out there saying it's going to 60 or 50, they're just saying that because nobody will know if they're wrong. If it never goes there, you'll never know. But if it does go there, they're going to say, oh, I told you so. So yes, I mean, these guys that have these bear market reports, this is not a bear market. This is not a recession. Recessions don't start like this. So I'm being cautious on any new purchases. Like I said, I'm buying things that I think are cheap and things that most people want. You want to buy when there's blood in the streets. You want to buy when nobody else wants to buy. That's where you make your most money. And I think right now, in a case of Apple, nobody wants it. Nobody wants to own it. They think it's a dog. Okay, well, I don't mind owning this dog, and I don't even have a problem with going down a little bit. But we're buying some semblance near low, we believe. So I think it's a good opportunity. You have a pretty good yield too, almost 3%, and they're doing their buybacks. And I think that they're going to, come September, product launch, I think if you wait till August to buy the stock, you're going to be paying 15% more. So that's all I have there. Please share my videos. If you share my videos, I'll give you 2 entries to the Green Bowl, and you can win a cruise to the Bahamas. If you like them, you get 1 entry. Also, we have on my stockdr.com website a ton of great stuff. If you click on the bottom, you'll see presentations. You'll see a lot of articles. You'll also see my events calendar. I have 3 events coming up, and I'm not going to quote the dates. I think one is May 24th, June 14th, June 21st, I think. But check on my events calendar, and you can sign up there. Now, we're limiting it to 5-6 people. It's in our office. It's after hours. It is really some great things. If you have the market jitters, you want to go to the one on the 24th and the third one, which I believe is June 21st. If you women in investing, we're redoing that one, which is very popular. That will be June 14th. Please check my website because I'm doing this off the cuff. So, stockdr.com, there's incredible information. Also, I've got a great piece that we developed. It is 6 important financial strategies for your 20s and 30s. So I know there's a lot of millennials out there, and I know they hate the word millennial. It's not a derogatory term. It's just you guys are stupid, okay? I'm just kidding. I have 2 millennials in my household. Anyway, but it's great. It's good. We have great information, great pieces. That one's not on the website yet. But feel free if you have somebody at 20, 30 years old and we need to learn their finances. And I'll do another Investing 101, and that's perfect for young kids. And I'm going to actually start doing that in the high schools because I think that kids need to be educated on what's going on as far as their financials. And I'm somebody else talking about me when I know it's itchy. Anyway, thanks for joining me. Share my video. Like it. The markets are indicating a little bit higher opening. We'll see. Oil's up. Energy's up. So, again, today's Thursday. We'll see what happens the rest of the week. We've had a couple down weeks in a row. Maybe we could squeeze out a gain this week. But again, I think this week is insignificant. It doesn't matter. I'm looking for opportunity, and that's where you should be focusing on opportunity. Don't go after last year's best thing. It's probably not going to be this year's best thing. All right? Hey, I'm Lee Seiler. Thanks for joining me. The website, stockdr.com or seilerwealth.com. Either way, 2 addresses, 1 website, but ton of great information. You can call us if you want to make your reservation for the events, or just you can do it right there online now. Go to our events tab on the website. And as always, thanks for joining, thanks for sharing, thanks for liking. I'll draw for 2 cruises next Tuesday. Have a great day and weekend.